Joining me now is Tom Hancock, portfolio manager of the fund. And it's great to have you on. And let's start right there. The fact that we are seeing a recovery here or a rebound here in some of these big tech names, does it have legs?
Yeah, thanks, Morgan. Well, it's kind of funny, right, to see these stocks where what really matters is how successful AI is, what the end uses are 5 to 6 years from now, moving around so much on questions about whether the government reopens in time for there to be Thanksgiving travel or not. That's not really what matters. So when you see selling on that, I think that's a good buying opportunity. On the other hand, if the market gets too excited about risk on, that's probably a good time to take some profits. It's been a nice trading sector lately, really.
So would you be buying in here when you have an RSI that's approaching oversold for some of these names like Microsoft, Meta, Palantir, NVIDIA? I could go down the list.
Yeah, I mean, we'd certainly be looking at buying more. I think we don't like every name in the sector, to be clear, or maybe to put it slightly differently, we do expect a lot of this kind of volatility going forward. And the real maybe fundamental risk that could come from the volatility is if the funding dries up, if just risk aversion rises to a level where investors aren't willing to support the capex. So where we want to buy is companies where we feel like they can weather that storm. The hyperscalers particularly is where we like to position around the trade.
There's been a lot of focus on funding. I guess how acute is that risk and how could that play out if it were indeed to come to reality?
Well, there's a lot of money needed, and there is a lot of money available. And one thing to think about is a lot of the people who are spending the money, stocks like Meta and Microsoft and Alphabet, do have a very diversified business. They have very strong balance sheet. They have very long investment horizons too. They're not just going to panic over short-term issues. So I think for most companies, or at least most of the market cap, it's going to be fine. There are some companies where they're taking on a little more debt and where maybe they're a little bit less differentiating what their product is. So again, you have to be a little bit careful about, we think, biasing toward the quality end of the trade.
If we expand beyond tech, what are the other sectors you like?
Well, healthcare is probably the big one. I heard your previous guest talking about that and some of those managed care names that maybe are selling off a little bit now over the ACA subsidy concerns. ACA is not a big profit pool for these companies. So any overreaction to that, I think, is a buying opportunity in a damaged sector. But we also like the big pharma names. And we think we're seeing with the Pfizer agreement, with the GLP-1 agreements, that there's a lot more bark than bite to some of the rhetoric coming out of the administration. Those stocks have been underperformers too. So that would be the other sector where we really have a lot of exposure in the strategy.
Got it. So let's name some names here, because you did come with some actual picks.
Actual picks. Well, our biggest holdings, Microsoft, I mentioned them. Alphabet, I'd kind of like to call out them because they're a little bit maybe unique across the AI ecosystem, and that they go all the way from end applications with themselves, with search and YouTube, down to kind of infrastructure. They have their own TPU chips that give them a cost of goods advantage over other people who are using NVIDIA chips. They also have their own proprietary data. They have their own workloads. They have their own technical expertise. So if you're thinking among the LLM providers, I think that's really a great place to position. And oh, by the way, some of those regulatory headwinds are kind of more in the rearview mirror than not. We saw Apple paying them actually to get access to Gemini rather than the other way around, which we previously had with search. So one of our favorite AI stocks, no doubt.